Good afternoon. It's Michael. I'm here in Scottsdale, Arizona. It is July 24th, 2017. A couple things I'd like to talk to. It's Monday. Over the weekend, I had a couple of friends that came by, and they're all excited because they're going to start getting ready to retire. They work for the federal government. They've got a pension plan. They've been saving monies for a long time, and they're going to take an early retirement because they've done very, very well in the stock market. Now, I'm really excited for them, but that set off alarm bells for me. Now, you keep in mind, now most of the people my age are in their 60s. These folks are in their late 50s. So there's a little bit of age difference. But, it's taken us 25, 30, 35, 40 years to accumulate what we have. And most of the wealth in America is in the stock market. And the statistics say 70% of the baby boomers like me have their money in the stock market. The stock market, as you know, is one of the things that I'm most concerned about. We're 8 years, almost 8.5 years into a 7-year cycle. So that means that we're overdue. The market has done really, really well. It almost looks to me like it's starting to get a blow off top. But hey, I'm not an analyst. I interview an awful lot of analysts. They send me their research. I hear these things. So I'm thinking it's getting really, really close. As you know, I talk about the economy. I think things are slowing down. I think the retail stores are just in dire straits. I mean, goodness gracious, I grew up with Sears being the #1 store in America, and they're going to go bankrupt. They're already bankrupt in Canada. Kmart's going just barely hanging on, so Sears and Kmart go bankrupt. JCPenney's stores closing left and right. 103 Walmart Expresses closings, almost 60 of the normal stores closing. And the list just goes on and on and on. The retail is just taking a terrible time. And I just saw that Ford is laying off 10% of its worldwide workforce, and they're offering settlements on another 30% so that they can see if they can't pare down their workforce. Now, they do these things because they're coming to the end of the cycle. And they have the automobiles have the highest inventory they've had since the last recession. Did you hear what I said? Since the last recession. So they're getting accused of channel stuffing, which is they keep building cars and they keep sending them out to the dealers, and dealers don't know what to do with all these cars because they're not selling them. They just have them on their lots. So they've got all these cars on their lots, and of course the manufacturers say, well, they sold them to the dealers. Well, the dealers got to sell them. Dealers are up to their eyeballs in cars, and of course retail is slowing down, automotives are slowing down, and today the National Association of Retail said existing home sales for June, which is one of our great months, was down 1.8%. So the three stools that this economy stands on, retail, consumerism, automobiles, and construction, are all starting to slow down. And we're starting to look at commercial and industrial loans are rolling over as well. So as far as I'm concerned, I think we're looking at a recession. I don't know if we have it in the next 3 months, the next 6 months, or the next year. As far as I'm concerned, it is baked in the cake. We are going to get it. I've been through 5, 6, or 7 of these in my business career. So this isn't anything that is, it's unusual or doesn't happen. It happens on a regular basis. It's just that it's going to happen now. We've been talking about this for a long time, and the feds have just poured in tons of money to stall the recession, and they've done a reasonably good job, but they've stopped. There's no more money going in, and of course, the word on the street is that they're taking money out. $10 billion for a month for 3 months in this quarter, 20 for the for each month for the 3 months in fourth quarter, and another $510 billion for next year. So, listen, that's going to take all that wind that the stock market's been enjoying is going to be gone. So if it's gone and we hit a recession, the average recession takes 39.6% off stock markets. That's the average one. Now, when we had the 2001 recession called the dot-com bubble, the NASDAQ lost 78%. Now it recovered. It took 10, 15, 20 years to recover. Let me ask you, if you're my age, if you're 65, do you have 10 or 15 years to recover your wealth? Do you? Because if you lose 40% of your wealth in just a normal recession, are you going to feel wealthy? Are you going to do all those things that you and your wife have planned to do? Are you going to go on vacations to Europe? Are you going to go on cruises in China? Are you going to go paint in the desert? Are you going to come here to Scottsdale and enjoy everything that we have? Go shopping and go to the malls and go to the dinners and go to the car shows and to go see the Diamondbacks play? See our sons play? Or is 40% going to just barely take all the wind out of your sails? So here's what I'm suggesting to you. You do not need to be 100% invested all the time. I'm in the real estate business. I self-retired 25 years ago. Maricopa County, where Scottsdale is at, Phoenix, Peoria, Chandler, Gilbert, the number one zip code in America. It's the growth factor. It makes it the number one zip code for the next 5 years, is in Maricopa County. We grew faster than any other county in America. 81,000 people came here net last year. We enjoy 222 people every single day net come here to live. Puts pressure on our rentals, puts pressure on our housing, drives the prices up. Now, there's bubbles all over this country. I think you have a huge, enormous bubble in the stock market. I think you have bonds at a 5,000-year high. Do you hear me? 5,000-year high. And I think housing has recovered off its 2005 high. We haven't quite gotten all the way. I mean, here in Phoenix, we're the poster child for foreclosed houses, so we know what it's like to have problems. But I'm telling you now, safety for you is number one criteria you can possibly have. If you want to enjoy your retired years, you need to make your money safe. Talk to your advisor about some kind of exit strategy. At what point do you start saying, maybe I'm going to take some of my funds off the market? At what point do you do that? I'm going to tell you now, I think you should take at least half of your money out of the stock market, and I'd probably take half out of the bond market. They've done exceptionally well. I mean, how much, but do you think it's going to double from here? So let me tell you that I hear people crowing that you can get an 8% annuity. Well, that's 8% with some of your money added to it. So your principal is being given back to you at an 8% level. If you come here to Phoenix, we have rentals that are going to give you 5 to 6% your first year cash flow. That's net cash flow. That's after you've paid taxes, insurance, after you've paid a management company, because you don't want to be the landlord. You don't want to pay calls. We pay someone to do that. So that's after you paid it. It's after we put in money for escrow, because garbage disposals break, dishwashers break. We're going to have to paint from now. Now we cover that in there too, and all the we put in the rental costs. We put in vacancy costs. We put in all those costs. HOA. We put all that in. They still cash flow net 5 to 6% first year. If you'd have bought it last year, your cash flow would be around 9 right now. Yeah, we grew it. Rents here have gone up. We have such growth in our rentals. It's unbelievable. So unlike any fixed income that you get, you're going to get monthly income, and it's going to grow for you. So here's what I say to you is that talk to your advisor. You can call us. We're fiduciaries. We're here for you. Legally, I'm a fiduciary, so I'm going to do everything for your best interest. I represent pension funds and IRAs and retirement money, and we have people that handle all your management costs and do all the repairs. You don't have to do anything. You're just the owner. You're just the investor. It's just your money, and it's in your name. It's never in anyone else's name but your name. So I'd say you need to start taking a position in this. Now, we go up and down. If you come and sit and talk with me, I think that we're going to correct a little bit when the recession comes. I think the stock market's going to get its eyeballs ripped out, and I think we're talking more than 40%. I think you're going to talk with 70% pretty easy. Can you imagine losing 70% of your wealth? Just think of that. So if you come here, we don't care anymore. Once we buy the properties, we don't care what happens to the values. All we care about is what we get each and every month. We're just income investors. And I have a plan and a strategy to take advantage of the housing cycle, which is long. It's 18 and a half years long. It doesn't end until like 2027. So we have plenty of time to season these things. I've been through like 5 of these, so I know it's going to happen. So it's nothing, it's going to be scary, but we can all survive it. So here's what I'm saying to you is if you need the income, we can get you 5%, maybe 6%. And if we can hold off till next year, I think rents are still going up. People need a place to live, and we're buying entry level, affordable stuff, things that everybody can afford. So we're not buying luxury homes at $4,000 or $5,000 a month. We're talking about $1,000 a month to $1,200 to $1,300 to $1,500. What most families can afford to live in. Because I'm going to tell you, as a family man, the last bill you pay is the rent. If you're always going to pay that rent, the last one that I shouldn't say pay, the last one you're not going to pay is your rent, because you need to put a roof over your family's head. And here in Phoenix, our growth has been unbelievable. So I had clients start 3-4 years ago with their 5 and 6% cash flow. Now they get like 12 or 15% on their money. They're so happy. This can be for you too. So what I'm telling you is take a look, talk to your advisor. Talk to your significant other. You're welcome to call me. I'm used to dealing with CPAs and financial advisors and your attorneys, your life coach. Talk to all these people. We'll do a strategy for you. So take half out. I would maybe keep some in reserve, but depending on you, we really need to know you. If you need the income, well, then we can place it for you. So give us a call.